Alright, so like we've been talking about, right, guys, we've been working with this super simple framework of using fair value gaps and swing points to determine our bias, right? So, what is bias? Bias is when I come into the market, I already have a predisposition of me thinking that price will either go higher or lower, right? So here we have a bearish fair value gap, right? On not just any bearish fair value gap, but a high time frame bearish fair value gap, right? So this is going to be a level that we know is going to be reliable, right? That usually when we start um, looking for setups, we want to have a level that we know that we can rely on. And like you guys remember back on this weekend, kind of in February 23rd to what is it, the 29th, whatever, um, we were talking about how I'm just waiting, right? Same thing that we did all the way up here. We literally repeated that process, right? Everybody was telling me, hey, why aren't you going long? Why aren't you going long? I don't like to trade the manipulation into a key level. I like to trade the distribution out of it. To me, it's easier, and it's also faster, right? The move back up into this weekly fair value gap took significantly longer than the move out of it, right? So that's one of many reasons why I much prefer to trade the distribution as opposed to the um, manipulation, right? So like we had been talking about, I'm just waiting. I don't want to do anything until I get this move back into here, right? Into this fair value gap because as we know, right? Whenever we hit a bearish fair value gap, aka IRL, and we are trending downwards, right? We already know if you want to find which way a market is trending, either you could just use your eyes simply like this, or you could, of course, like we mentioned a couple streams ago, you could use the 7 and the 28 moving averages, and that will give you a directional bias. And you want to do that on the higher time frames, right? Weekly or daily, either one is fine, but I prefer the weekly. So, so like we said, right? We know that anytime we're trending lower and we hit bearish IRL, aka a fair value gap, we know that price is going to want to go where? Who can tell me? When we hit IRL, price goes to where? Exactly. Price goes to ERL, right? And here we have ERL, right? And we have two ERLs, which is something to take note of. But of course, our immediate target, our minimum target, is going to be the one that's in closest proximity, right? We always want to be aiming for low-hanging fruit. I know that it's really nice and fun to get like ridiculous RR trades and stuff like that, but in reality, we have to remember that this is one of the hardest jobs in the world, right? Statistically speaking, there are not many people that can do this correctly. So when you think about that and you're always coming into the market and you're trying to hit a home run, just remember that the likelihood that you're able to do that on a consistent basis is going to be significantly lower than you expecting um, something just close proximity, low hanging fruit. That's why I take 1 to 2 hour trades almost every single time. Even if I do think that it's going to go lower, I I just want my 2 hour and that's it. I'm satisfied with that. So making sure that we're content with what's given, right? The minimum target is very important. But nonetheless, we will have this mapped out so that we can take note because we absolutely can come all the way down here, but we just don't have to, right? And just to kind of like give you maybe an example, um, um, we'll skip the example because I can't see one right now. But regardless, right? So right now our bias is lower, right? Because we just moved into a bearish fair value gap, and now we're moving into bearish ERL, right? Or so is our expectation. Now, if it were truly this easy to just do IRL to ERL, right? Then everybody would be doing it. We have to make sure that one of the things as traders is that we have to be able to apply filters in form of time and in form of price. Filters are what, I want you to kind of think of it like I'm sure you guys have seen those videos where somebody's in the river and they're kind of scooping up dirt and they're slowly sifting the dirt out to reveal the gold pieces. This is very similar. If you don't have any filters, you're going to end up with a handful of dirt, right? And you need to be able to properly filter from the higher time frames all the way down to the lower time frames, executing your top-down analysis correctly, right? So we already have one filter here, right? We're number one, we're always waiting for a key level to be hit before we engage in price. Number two, when that key level is hit, we want to make sure that we have an opposing target, right? So our key level is this weekly bearish fair value gap. Our opposing target is this weekly swing low, right? Now, the next filter that we've been talking about is waiting until a candle's high is manipulated, right? And then we close back inside the range of this candle, aka candle 1, right? Because as we know, swing points have three candles. One, two, three. And of course, I'm making an assumption that this candle will close lower than this second candle, right? But if we can just kind of zoom out for a moment, we can see every single high time frame swing point, or almost every single high time frame swing point, leads or is the origin of these really, really big moves that we want to catch, right? They're the start of almost every single move that you and I want to participate in, right? Swing low, right? Swing low, bang. Swing high, bang. Swing low, bang, right? You get the idea. So it does us a lot of good, and to be honest, it's my favorite thing about this kind of approach. I'm not worried about well, what's the volume profile or what's the volume at or what does the 5,000 weekly SMA say? I'm not worried about a whole myriad worth of things. I'm worried about three candles and two price signatures, right? Almost nothing else because less is more in this game. I'm sure that most of you here have spent a lot of time trading, and one of the problems that you've likely encountered is experiencing some form of analysis paralysis where you have so many things going on in your chart, you just don't even know what's going on anymore. So having a simple approach to price and not overcomplicating things where you have like you got an order book open, you got a heat map, you got volume profile, have a ton of MAs, those kinds of things will serve only to cloud your judgment and make your analysis less clear, right? And remember that everything we do should be process oriented, system oriented, right? If any of you guys have ever coded before, it's going to be very similar to that. There has to be systems in place in order for us to execute properly. Otherwise, we're leaving too much room for trading to really just become about our intuition. And intuition is not to say that nobody can trade using their intuition, but I don't know almost anybody that just trades purely based off of intuition. And it's also difficult to get consistent results if you're just trading off of based off of your quote unquote intuition. Because you will have to backtest. I don't know, sometimes you have a bad day, your intuition might be off. But when you have a system, I know whether my system is going to work or not because I can go test it for 3 years and get a win rate. And I know that I have an edge in doing that system, right? And so I can be confident when I enter the market. So going back to the filters, right? We can see that we got a candle 2 closure back inside candle 1. And one of the things that we'll be talking about, not this session, but likely the next one or the one after, is how do we get involved here in candle 2? And actually, we'll go over a little bit about how we could have gotten a trade off of this candle too specifically, right? And now we can see that we're in candle 3, right? Which candle 3, I always tell you guys, I want you to visualize it is the distribution phase, right? So if you're not familiar with accumulation, manipulation, distribution, um, accumulation, manipulation, and distribution are how the markets typically move, right? If we think about a large bearish candle, right, it would look something like this, right? Where we have the opening price, which is here. We have the high, which is what forms the wick high, right? Accumulation, manipulation, and then we have our distribution, right? So I always tell you guys something that might help you is if you visualize this candle one as the accumulation, right? And if you notice, there is accumulation here. Look at how many candles have been encapsulated inside of this small range right here. This is one candle's range, and we have one close inside of it, two closes inside of it, three closes inside of it. Whenever I start to see this many inside candles being produced, I know that on the horizon there's going to be a very explosive move, right? And so that's good information for us. We know a big move is coming. Now we just need to know the direction, right? So when we see a candle 2 close back inside of candle 1, I'm looking for candle 3 not only to go lower, but more specifically, I want to see this wick high get formed, right? I want to see us move higher first. I want the open to happen, right? And then I want to see price move higher, and then I'm going to be very focused, right? I'm looking for this key level here, and I'm focused to see us go lower, right? So what we're doing right now, who can tell me what phase of price do they think that we're in right now in this current candle? Are we in the accumulation phase, the manipulation phase, or the distribution? Take a stab at it. Who cares if you're wrong? I promise you, you won't be graded on this. And if you're wrong, then you have an opportunity to be corrected. Okay, let's see. Let's see a few more answers. I see some people typing. Okay, let me ask you guys like this, right? Are we expecting a bullish candle right now, or are we expecting a bearish candle? We're at, this is the first day we've opened, but are we expecting this to end up when this closes? Do we expect it to be a bullish or bearish candle? Okay, if we are all expecting it to be a bearish candle, right? Then what is a move higher in a bearish candle? Is it A, M, or D? There we go. So we would not be in the distribution part of the candle. We would actually be in the manipulation, right? Because if we're all expecting a move higher, or if we're all expecting a move lower, but what we get is a move higher, I can totally understand why you guys think it's distribution because this so far, this is a pretty large manipulation, right? It's a decent size move for BTC. So you guys see a big move and you think, ah, okay, we're in distribution. But if our overall expectations are a bearish candle, then ultimately this is manipulation, right? Just a large one, right? And we can look at an example of another one, right? This is a very large manipulation lower, right? Could also consider this to be a large manipulation lower. When people see this move down, of course they may think that we're distributing lower, right? But in reality, a large manipulation only gives leeway for a large distribution, right? I want you guys to remember that. If you can measure the manipulation, then you can anticipate the distribution. A larger manipulation leads to a larger distribution most of the time. Yep, definitely agree with you, John. The the pineapple eaters are on top. But yeah, so now the question becomes, where are we manipulating to, right? So what I'm going to do here, let's go ahead and make sure that we annotate everything so we don't get lost in this, right? One of the big skills that you guys will have to learn to develop is not only making sure that you have the correct annotations, but also making sure that it's clean, right? Anytime you see my chart, for the most part, you're not seeing 1,000 million different lines, right? You're seeing just a couple usually doesn't look too overwhelming, right? And that's what you want to aim for. If your chart looks like it potentially like you have to give somebody a seizure warning before they look at it, like you're probably doing something a little bit wrong in terms of the organization facet, right? So let's go ahead and map out our candles how we talked about last stream just to help visually guide us, right? We'll have candle 2 mapped out like that. We'll have candle 3 here. And normally I wouldn't have these on here because I can already see it without. Um, but for the sake of any newcomers, we will tag these on here. What's a good color for accumulation? We'll just put like gray or something. Okay. We're also going to map that out as well. We're going to put candle 1. We're just going to put accumulation or just an A, right? Just so we're reminded. Okay. Let's map out our candle 2. Candle 2, like we just spoke about, that would be our manipulation. Yo, what's up, Chemo? Welcome back, bro. How's that been? I know the fast can be pretty tough, right? I think I tried it one time. Friend of mine, good friend of mine, sent me a Quran and asked me if I would join him, and it was pretty tough for me, and I wasn't even doing the hard version. But back to this, right? So right now we're in candle 3. So what I want to be making sure that I have mapped out is candle 3's open. Okay. Now, the reason that I want to map out candle 3's open is because it's a reference in time, right? Opens are time-based signatures, right? Because we open on a very specific day, on a very specific time, every single time, right? And this is going to help us frame our power of 3 because you could hop on a chart, you could see an accumulation, and then you see a move up and we start to drift lower, and you can make the assumption that this is power of 3. But if you really want to get precise and good with power of 3, then you will understand that power of 3, if you want it to be reliable as possible, you are framing it based off of time. That could be a monthly open, a weekly open, a 4-hour open, right? It makes framing manipulation and distribution significantly easier when you're looking at the open, right? Because regardless of what price is doing right now, I know that if I'm expecting a bearish candle, I need a move above the open before I start to get involved, right? I need something like this before I begin to get involved. If we open and just go straight lower, I'm going to start thinking that, hey, we didn't get any sort of significant manipulation higher. Therefore, this is the manipulation. And I will probably switch my bias to think that price will go higher and that we have the manipulation lower, right? And this is the price signature that we call the devil's mark, which is what we're also going to talk about today, right? So, as you can see, we have a very, very small wick, tiny, tiny wick is our below the open. This is not going to be super supportive of the idea that we are potentially um, going to. Whoops, my fault. I knocked my mic off. But when we have a tiny move, and again, I want you to keep something in mind, right? When we talk about continuation candles, you do want to see a small wick, right? But you want to see a wick, right? Like we look at this, this is not a big wick, right? But this is almost no wick. And sometimes you will see no wick. So a good example, right here, right? This is a devil's mark. A devil's mark is a candle without either a wick on the high or the low. So when I saw this, right, and I'm thinking to myself, how do I want to position myself here? I see an ERL here. I see that we manipulate above. I know that this move higher is fake because we didn't even have a significant or any sort of significant manipulation lower, which almost all candles have. And don't get me wrong, if you go out through price, like for example here, sometimes it does happen, but for the vast majority of the time, anytime I see something like this, especially when it's paired up with a fair value gap, or any other sort of key level that we use, I already know that this move is fake. I already know that we're not going to break out from here, right? So when we hit this ERL and we form this candle too, the amount of confidence that I have that price is going to go lower into at least this devil's mark is significantly higher, right? So coming back to the current candle, right? This I would consider to be a devil's mark because the manipulation below the candle's open is just so negligible. It's so tiny that it's not significant enough. So once again, now the question becomes, where are we manipulating to, right? Does anyone want to take a guess where we may be manipulating to? And I'll give you a hint. It has something to do with candle 2. And it will also become a lot easier to see when we drop down into the daily. Beautiful, beautiful, beautiful. Yep, absolutely. No, um, candle 2, we don't want to see price manipulate all the way back into here because then that would invalidate the idea that this is a swing high, right? If this candle goes higher than this one, then this is not even C2 no more, right? And we got a huge move up, right? And then a close back inside candle one's range. So right now we're anticipating this to be candle 3. And you don't have to trade candle 3, right? You could of course trade candle 4, right? Or maybe even 5 depending if candle 3 or 4 even hits this ERL first, right? But the answer that I was looking for was the midpoint of this wick, right? The midpoint of a reversal candle, you will often see is a point of reversal most of the time. We map out the midpoint of this candle right here. Notice the sensitivity to it. Taps it, goes back up. Taps it, goes back up. This is a very sensitive point for price. So even if we don't reach this point, that's okay. But that is what I would have my eyes on right now, right? So now what we're going to do is we're going to drop down into the daily. But first, let's actually change the color of this. Do yellow. Actually, that's a little bit difficult to see. All right, we'll go with purple. Okay, so now we're going to drop down to the daily. Now, when we look at the daily, I kind of want to take your attention to two things. Okay, number one, what do we have down here that's significant? What about this level makes our eyes snap to it? Close. There is a swing low there, but the thing that I really want your eye to be caught to, no. Think about liquidity. Why why am I looking here and it's not just I'm not just paying attention to just a swing low, right? I'm paying attention to relatively equal lows, right? Remember we had the conversation of equal lows? Yep, there we go. Yeah, even though they are not perfectly equal, they are relatively equal. And anytime we have relative equal lows or relative equal highs, your eye needs to snap uh, to those levels because they're extremely powerful in terms of as a draw on liquidity. Okay, so in one of the past streams I even showed you guys a couple examples of how I was able to make a pretty ridiculous amount of money by being able to target some relative equal lows or equal highs. So that's the first thing, right? Candle one's low has relative equal lows next to it, right? Now, when we drop down into the daily, we have two key levels that we could be looking at, okay? Number one, we could be looking at, and you're going to see how they all kind of start to overlap more or less. We could use this bearish daily fair value gap, right? Is a key level to potentially be looking for a trade off of, right? We could use the daily inversion fair value gap, which would give us a tighter version of the fair value gap, right? And notice as well, if we use our premium and discount here, let's see. Which one is it? Oh, I swear to God, I'm like, there it is. Okay. If we use our premium and discount here, we can even make it a little bit tighter. Maybe even go like this. If we want a higher probability trade, again, price does not need to go all the way up into here. But if we wanted the highest probability trade, this is exactly what we would be doing. Me personally, though, I would probably be looking at this because I like to give a little bit of leeway. Um, but in the beginning, you really want to make sure that your win rate is as high as you possibly can have it, right? So I would be personally using the inversion. There's also a daily change in state of delivery that you could have used, right? We change in state of delivery here, right? So that creates an order block. Notice, notice that we create that order block. Price comes, taps back into it, has a very nice reaction lower, right? And this still is an order block, the whole thing. If we map out the midpoint of this order block, there's likely going to be somewhere inside of here. Conventionally, yes, you would work from weekly to 4 hour to 15 minute. But when you start to get a little bit more advanced, you start to use maybe more than three time frames. Maybe you go from weekly to daily, 4 hour, 5 minute, you know. Um, but me personally, even if I'm working from a weekly to 4 hour, I still want to see what's on the daily, right? It's still pertinent to me, right? Because we would not see this inversion fair value gap. If we just stayed on the weekly, then I'm just waiting for this midpoint, right? But we may not hit that. And to be prepared for something like that, I need to see what's on the daily, right? So I would be using this inversion fair value gap. Yeah, and of course, right, if you're starting to get confused and maybe there's too much analysis going on your chart and it's becoming a little bit overwhelming, then yes, you want to stick to something more simple, right? Which if you went daily, you wouldn't be aware really of this weekly fair value gap. So you would not have been able to really catch that candle 2 trade that we'll go over in a second, right? You would just be looking for what we got right now, right? So different time frames, different opportunities that are visible to us, right? So using this inversion fair value gap, now let's take a look at the 4 hour. Okay, as you mentioned, John, we have a candle 2 closure back inside candle one's range. Candle one even has a little devil's mark here, which is pretty nice, right? And notice too, yeah, the fib is drawn from candle two's wick to wick, right? So I'm taking just the wick, and this is what you want to do for reversal candles when they're long, because the midpoints of reversal wicks like this are essentially, we treat them like, almost like fair value gaps. Okay, so right now we have that candle 2 closure back inside candle 1. There is a potential short opportunity here, right? Candle 3 has a small opposing wick, supportive of the idea of an expansion candle. Personally, I wouldn't be trading it only because we're out of session. Um, but there is definitely a trade idea there. What I was looking at was a 1 hour inversion fair value gap potentially to be forming here, right? And if you notice too, if when we're on the 4 hour and we hit this weekly key level, we can see, or we should be able to see, our market maker model, right? We have the buy side of the curve, sell side of the curve. We have all of this low resistance liquidity to come into, right? Take a look when price starts to make this move back up into premium, right? Is after we start taking out some lows in discount, right? Then price comes back up into premium, right? We have a premium fair value gap right here that we could also be using, right? I'm not going to overlay it because the daily inversion gets it done for me, right? So definitely there is a trade idea here inside of candle 4, right? Then we'll go ahead and drop into the 1 hour. So like I said, I was waiting and still kind of am waiting for an inversion, right, of this fair value gap right here. Now, I want you to also think about, look at how we're overlaying all this analysis, aka all of these filters on price, right? We're not just saying, weekly IRL to ERL, let me get short. No, right? We're going to be a little bit more tactical than that. Right, now we just had a sweep on the candle 1, right? We have a devil's mark on this what would it be, candle 2 of this potential swing point that's forming right now. Like I said, me personally, I'm waiting for the inversion. I don't need to rush. If I just took it off this key level, maybe I would have made some money, right? But in reality, waiting for this sweep and then maybe a change in stated delivery paired with an inversion, I mean, like, that's going to be so much more convincing to me, right? And then if we start dropping down to maybe the 15-minute or the 30-minute, either or, now we can start to see the market maker model that we potentially have underway, right? There's our original consolidation. Here's the buy side of the curve, potentially the start of a sell side of the curve, right? Smart money reversal taking place in a key level, right? We can maybe wait for a 15-minute inversion to get us there in there a little bit earlier, right? Maybe on the 5-minute you're already in if you're using the 5-minute, right? You obviously wouldn't be targeting all the way down here no more, right? You would be using the smaller market maker model that's inside of here, right? Which would be this, right? There's our original consolidation. We have an inversion right here, right? And now we're starting to get a little bit into low time frame dynamics, which won't do too much of that today, just because it gets a lot more difficult, we'll say. Or maybe not difficult, but it's certainly more nuanced, right? So we have a M5 IFEG here, right? And notice this this potential trade is inside of our time windows that we typically want to be operating inside of, right? So we have that move lower, so we could have gotten short here, just as a potential example. I'm not telling you to trade anything, right? And we get a nice 2R right there, right? So there's a potential trade right there, or you could be waiting for the 1 hour, right? So for BTC, we're still waiting. Well, not still waiting, but candle 3 is in its manipulation phase. And look, you can wait for the manipulation phase to be over to trade this, right? You can wait for that. Or you could have traded inside candle 2. How would one have done that? We hit this key level on the weekly, right? We use what I call the GOS. That's my own personal model. I won't go into all the details of it, but if I were to just kind of boil it down and give it to you in a nutshell, weekly key level, 4 hour inversion. We inverse here, stop at the high, right? And look at nice move lower, right? What time does this happen at? 7 a.m. 4 hour candle. Perfect, right? Perfect in time, perfect in price. So unfortunately, I have not really been involved in the markets this week or last week as much. Not too many trades taken because right now it's important to just stay solvent. But this is a really, really nice trade opportunity right here that could have been taken using that model, right? So that's how you could have caught candle 2. And in candle 2, right, what you're really waiting for, the reason why it's a little bit more difficult than candle 3 is because you have to time and be able to understand when is it going to end? And when do I know it's ended? Right? That takes a little bit more skill and finesse than we already we already know candle 3 is going to go lower, right? The question just changes a little bit. When is candle three's manipulation gonna end? Right? And we do the same thing. We find that key level, right? And then we wait for an inversion or a CISD or any of the entry techniques that I've been teaching to you guys. Yeah, I saw that, man. I was very impressed, and to be honest, it didn't even seem like you used like very much analysis to execute that. You were just using your visual power of 3, which can be effective, right? For sure. Um, and obviously, you don't need to be super duper precise with price, it's just for those who want it. But yep, PO3 and seasonality. And believe it or not, that right there is so much better than people having a million EMAs on their chart. And I tell you this not to shit on any other forms of traders. If it works for you, it works for you. I'm not talking about you. But if you've been trying to force something like that, I don't say it to come at you. I'm more so speaking from a place of experience because I was that guy. If I show you guys some of the indicators that I've created in the past, I mean, like, I'm afraid maybe one of you guys might go blind in here. Let's see. Let's see if it'll even come out. I mean, what do you guys think of that, right? Like, do you like that? Does that look nice to you? Is this something that you want on your chart? Probably not, right? And your answer should be no to that. Yeah, it is a super mega indicator and it's very disgusting. Yeah, we can definitely move on. I think we got a lot of good insights from that though. But yeah, we'll go straight to gold. Hope let's see is I don't even know if Adir is in here anymore. Maybe he got fed up with my shit and was just like, nah, fuck this. I told this guy to do it now. And he did not listen. Um, so right now for gold, we can see I'm looking at this volume imbalance. volume imbalance here. What I would like to see on gold is I would like to see a sweep of this as our potential candle 1. I would like to see us move lower into this volume imbalance, hit it, close back inside the range of this first candle, and then either you can trade candle 2. When we hit this level, you're going to start looking for a reversal, inversion fair value gaps on the 4-hour or CISD, and then you can start trading higher. Or if you want a more um like where you don't have to make so many inferences on price, you have like a little bit easier of a time trading, then you would wait for this week to take out this low, close back inside of here, and then you would wait for, yeah, next week to trade candle 3 back up into here. But structurally, on the higher time frame, there's nothing that suggests to me really that gold is bearish yet, especially given the conflicts that are going on right now, right? The volume imbalance is when the bodies of two candles do not touch, right? So kind of like a fair value gap a little bit, but notice how this candle's body and this one, they have a gap right here where they don't touch, right? Just like right here. And this is one of the ones we use to catch this crazy gold long, right? Um, so we can think about volume imbalances as IRL. So we hit IRL, we're clearly trending upwards. Here's ERL, here's ERL, right? So on the 4-hour, if we can even look, we can also see, right, that current price action actually supports this idea because what do we have here, guys? What would you call this? Yeah, okay. That's also a good answer. We do have relative equal lows down here. Very nice. But um, what I'm kind of pointing your attention to is that this is accumulation, right? Price is in a holding pattern right now. So what I would expect is either we can go from ERL to ERL and then reverse, right? As kind of like we talked about in that past lecture, ERL to ERL is a reversal signature, or price can go lower, take out these relative equal lows, hit this key level, we get a 4-hour inversion, and then we have equal highs to target, which I would prefer that one. But this one is good too. And if you guys remember double purge, which I know we did not spend a lot of time on that at all, that would be double purge if we went higher, lower, and then higher. We purge the highs, we purge the lows, and then we go higher. In a bullish double purge, the highs are purged first, then the lows, then we go higher, right? Because longs get induced, they get fucked up, shorts get induced, and then they get fucked up, and that's why the market takes asses, right? Because it can efficiently take out both sides. So that's what I would say for gold. I would be waiting right now. That's my answer to you. I would be waiting. I would not be jumping into any sort of trades right now. I would be waiting probably for next week and this week to manipulate lower. Um, let's take a look at oil, right? W call out on oil, right? Like I told you guys, right now we are inside of a quarterly fair value gap. If you guys remember, like we talked about, quarterly levels are a big part of how I was able to make so much money last year. How I was able to amass a decent sized following, how I was able to catch tops and bottoms, right? We hit that quarterly fair value gap. We had this sweep, right? Candle 1, 2, and then here's candle 3. We didn't get a mechanical closure of candle 2, but we don't always need that, right? It's just another variant. So, um, yeah, we've had a pretty insane move. Remember how I told you guys, remember when I said this to you? Look at all of this low resistance liquidity being built up, right? You guys remember when I said that? And what do I always tell you guys? Low resistance liquidity gets sliced through like a hot knife on butter. And that's exactly what we got, right? I don't like trading manipulations into key levels. I like trading the move out of it because I like the way that we move through low resistance liquidity, right? So, yeah, oil was a huge winner. Um, Lots of opportunities in here to trade different candle threes, right? Um, it's candle three, right? Candle three, candle three, 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 right? Look at all of these candle threes, and I mean, if you got in when I told you, when I called it out, I mean, you should have made pretty big bank, right? Or even for those that had paid attention to gold when I called it out back here, right? Also had a really nice move up. No questions on that? Very nice. All right, cool. So just taking a look at hype, just because it's probably one of the more interesting altcoins. Yeah, we'll touch on Euro USD as well. We'll make that probably our last one. Yes, guys, buy my private call center. I'm it's in the works. It's being built right now. Um Okay, so like we talked about, right? Weekly fair value gap, mapping out the midpoint of large fair value gaps because of course we don't want to just use this whole thing, right? And another way that I teach you guys to kind of add some relevance is using premium and discount. In this specific scenario, doesn't really do us too much good, but like I told you guys, we get a candle 2 closure, CISD, right? Candle 3 did move higher, right? But look at candle 4. And now I'm expecting from IRL to ERL, until we hit ERL, I'm only going to be focusing on longs, right? So again, if we use that same, like I told you guys, my personal model, the GOS, we hit the key level. What am I looking for in the GOS? Who can tell me? What's the entry technique for it? Perfect. Inversion fair value gap. So what's our key level in this weekly fair value gap? The midpoint. When we hit that midpoint, bang. As soon as this happens, I'm saying, okay, this is a potential inversion fair value gap I might take, potential entry, and we get this one right here, right? This is the most recent inversion fair value gap that takes place after we hit the key level, okay? So R to R, not perfect, right? But depending on how high your target is, right? We could be targeting all the way up here. The RR is going to be 4, right? I could be targeting these relative equal lows right here in my, I'd be getting 1.86 RR, right? I could go premium and discount. I'm looking for these equal highs in premium, or maybe these two relative equal highs, right? There's a lot of opportunities there. Maybe I got stopped out because I put my stop loss right here, and then I re-enter again using this inversion for a value gap, right? Maybe I get a little bit more off of that. But regardless, there was a really nice entry on hype, and these notes have been here, guys. Like I haven't changed them. I leave them the same so that we can come back, and it feels good to see that they're working, right? That we were looking at the right things because we were anticipating, right? IRL, wait for that candle 2. Now I'm looking at trade candle 3, candle 4, candle 5, right? All the way up into this ERL. If we started getting reversal signatures here, then okay, maybe I might not aim for this. But just being right about the direction does so much for us. So I'm glad you guys called out I'm glad you guys called out hype to me because yeah, it's been pretty nice. Okay, so we'll start off on the weekly. Okay, we see that we had this devil's mark, and like I told you guys, anytime we have a devil's mark, I'm very skeptical. I say, yeah, I don't know, I'm not so sure about this move up, right? And then we can see after we took out this high, we've manipulated lower, right? So we do have some relative equal lows right here, but we did also take out this low. Um, so let's see. Let's do on the daily. On the daily, I would say I would be looking for If we can get an inversion, remember that anytime that we have a fair value gap and a volume imbalance, you want to combine them like that, right? If we can inverse here, then I'm going to be bullish. If we start to reverse off of this, then I'll be bearish. Um, this is a little bit of a tricky chart only because we've just had expansion into expansion, so it could potentially be a full-on reversal, right? We had a weekly inversion for value gap. So I would probably be leaning more towards bearish, but just like I was saying with BTC, I'm gonna wait and I want price to show me its hand before I decide to get involved. So let's see what happens at this level. If we start forming 1 hour inversions and market structure breaks lower, then I'm gonna be of the opinion that we're probably gonna come for these relative equal lows, right? Um, because remember, ERL to IRL is retracement. So I would be more of the opinion that we'll probably end up moving off of this and going drifting lower. But let's see. We'll have to wait for that. I think we pretty much went through everything that everyone wanted to talk about, right? I'm not forgetting about nothing. No? All right, cool. Oh, maybe chemo. Okay, cool. Yeah, of course, guys. Honestly, I uh I really think that you guys should if you guys weren't here for the beginning of this one, there's a lot of good information in terms of how to do top-down analysis like we did on Bitcoin. I know that that took up most of our time, but honestly, that's sauce right there. Yeah. Yeah, it's only 2 days a week for right now. Um, maybe it will return back to 4 next month. But yeah, for now it's Mondays, Wednesdays, what is it, 4 p.m. Eastern? Yeah. Yeah, no problem, guys. Appreciate you guys turning up. Yeah, I don't know. They haven't really been asking me to provide it, so I don't know. But I'll make sure that this one gets posted for sure. All right, guys. Again, really appreciate you guys turning out. Means the world to me. Gonna just keep looking to give you guys value, whether it be in form of analysis or insights. Um, be safe. Make sure you're familiar with the rules, and yeah, don't do anything stupid. Safe trades. All right, peace, guys.